Hi, Andre again here, and welcome to loading our data from a Excel spreadsheet. All we need is at least 2 consecutive periods of equal or unequal length, it doesn't matter. In this case, we have our 2016 and our 2017, as well as our current period on a monthly basis. So I've chosen a fairly difficult environment just to show you how easy this can be done. In addition to that, we need our income statement and our balance sheet. These can be done in 2 separate spreadsheets if you wish, or on the same spreadsheet, it doesn't matter. So moving forward, let's get our data set up. And when we have logged in, we have a couple of options. And in this case, we're going to choose creating a new company from Excel. What this allows us to do is to put in our company name. So I'm just going to call this my company. And we set the periods. So the first thing we've got to do is establish the first date of the period, which we know is 2017, and we select the frequency of the periods. In this case, I'm going to choose monthly because the sort of later periods are more frequent on a monthly basis, and I'm going to generate my periods. Okay, as you notice, I made the error that I said only a minimum of 3. In fact, we need 11 periods because we've got 9 monthly periods in our current, and we've got 2 annual periods. So I'm going to change that to 11 periods just to show you how it can be done. In addition, now we have all the periods set up for ourselves. What we notice is that our first 2 periods are actually based on a monthly basis. So what we need to do is to change that. So we edit that period and we put 12 months there, and we edit the next period and we put 12 months there. Okay, so once we've done that, we should be in a good place to start importing our data. There's our monthly data for our current period ending September the 30th, 2019. All right, let's press OK, and automatically we get placed into our environment where we establish or access our Excel file. Now notice there's 2 types of Excel files. There's XLS and also XLSX, depending on which type of file you've saved. So let's go and retrieve our file, and here it is, the monthly balance sheet. That's what I've called it, and we press open and OK. Now this will bring in our data from our Excel file into this format on the right hand side, and our goal is ultimately to bring this data into the left hand side, and that will complete the loading process. What we have in front of us is the balance sheet. What I like to do is to start off on the income statement, as it's sort of just a logical process. Now, when we look at the income statement, I've purposefully placed a sort of a blank column. Now, in order to get our data, we need to have all these columns consecutively. So I just press in that column and I'll hide that column. From here, it's relatively simple. Basically, all we deploy is what we call the double click process. So what we can do is establish which line item we want. Do we want only one line item, being the total value, or do we want to show the separate categories of the total? So in this case, I've got sales with 3 different categories, and in this case, I wish to show each category separately. So I double click on each item, and it will automatically bring in the exact description with the relevant data for each period. And we can quickly do a test to see if that's the case. In the last period, for example, my directs should be $618,000, and I can bring my data across on the right hand side just to check $618,000. Okay, so that seems fairly accurate, and all we do now is to go to our next section. Our next section is cost of goods sold. In this case, really what I want is not the individual components of the total. I just want to bring in the total. So I'd like to at least see what my material component is, my direct labor component, and my other cost of goods sold. So once again, double click on materials, double click on direct labor, and double click on other cost of goods sold. If I wish, I can show my progress. If I want to check to my original Excel just to see that my totals are correct, and all I did was press show progress, and that will show me that my data is in fact either right or wrong depending on what I've done. Getting out of there, we can move back to the next section operating expenses, move my scroll bar down, and here I've got a couple of categories of operating expenses. I've got my personnel, I've got operations, etc. Once again, all I'm looking for is the total. So I'm just going to bring in my total personnel, that's there. I'm going to bring in my total operations, that's there. And I'm going to bring in my total occupancy and total administration, sales and marketing, and my finance. Now in finance, I've got property taxes and I've got loss and sale of fixed assets. I may want to sort of keep them separate, so I'm going to put them in as separate line items. And then I have some abnormal items in my income statement. First of all, I've just got this line item called total abnormal items, and I actually want to show this below the line. So I'm going to leave this out of my operating expenses for the moment. In addition to that, I have some other sort of unusual areas. I have interest expense. Now there is a separate line item for interest expense, so I'm going to leave that out. I do have my depreciation here. So one of the things that I do need to do is to show this separately. So I'm going to take in my depreciation, and there you see depreciation and amortization come in. Now I do want to classify this as a separate type of behavior item. So I'm going to go to classify and show operating expenses depreciation as a separate type of thing. Now this helps us with our cash flow and establishes our EBITDA and all of that. So that's why we do that classification. And I don't know if you noticed, you can also classify some of your costs either as fixed or variable, and that would help you with your doing your what ifs going later on. So if you have a feeling for which costs are fixed and which costs are variable, that's a nice feature to deploy as well. And we'll have a separate video on that. In addition to that, I've got my gain on sale on fixed assets and my bad debt expenses. Now I want to include all those items below the line, in other words below the EBITDA line, so I'm not going to bring them in as operational expenses. And we'll go to the next section to see how that happens. Now the next section is all about other income and expenses, and I can either bring in these items there, which will show below the EBITDA line, or I can show them as extraordinary items. So in this case, I'm really going to keep it as extraordinary items to really separate it nice and cleanly. So my total abnormal items, remember I didn't bring that in, and I'm going to bring in my gain on fixed assets and my bad debt expenses, because I think those are sort of abnormal, and I want to try and get a nice comparison from year to year. So as you can see, even though your income statement might be presented in a certain way, you can reclassify these items relatively easily to get to the goal that you wish. All right, now the last thing that I think I've forgotten about was my interest expense. So I'll go back up and get to interest expense, and let's go and have a look there. There it is, and I double click on the line item saying interest expense, and there's my interest expense. Now in theory, I should be relatively good. Let me have a quick look. Show progress, and basically, let me have a look. I think let's just go to the last period, because I'm showing here a net profit after all the goodies, $129,000. Let's I'll close that and just move this across, and let's do a quick check again. Show progress, and there it is, 129,714. Okay, 714, 129, 715. Looks like there's a little bit of a rounding issue, which I'm not really concerned about. Okay, so let's get out of there, and now we can move straight to our balance sheet. Now, as you've seen at the top of your screen, you have your income statement tab, and then if I click on there, I can move into my balance sheet tab. All right, there's my balance sheet tab, and I'll go to the top of my balance sheet just to make sure I've got everything nice and clean there. And now we can go to the next section, which will ultimately give us our balance sheet areas. Now, if I don't want to, I can always use this go to, which will tell me, where I want to be, if depending on, what your preference is. Anyway, starting point, cash at bank at the balance sheet. What does this look like here? Cash at bank at the balance sheet, which is over there, and I'll take that line item there. My next section is accounts receivable. I'll bring in my accounts receivable. And my next section is inventory. I can show my categories of inventory, although it's not really necessary. Just the total inventory is good for me. Next section is other current assets. All right, now, yeah, the balance sheet is a little bit back to front. And I do have a few other current assets, not really classified as such, but once again, I want to bring them in as the other current assets category: loans, receivables, prepaid expenses. There you are, and refundable deposits I'm going to include as other current assets. My goodwill I'm going to show separately, and let's keep going. I think that's pretty much all that would be included as other current assets. Fixed assets, all we really need is the net value of our fixed assets after accumulated depreciation, so I'll bring that in nice and easily. And now we get to investments, and with investments, in fact, this goodwill, I'm going to show this goodwill as investment, so I'm going to bring that in there, and I think we should be relatively good as far as that's concerned. In fact, let's have a quick look. Our total assets, in fact, let's go back to the old story, 8395, show progress, and let's have a look and see how close we are here. And 8395,112, 8395,112, and so far we are good. All right, so that gives us our total assets. Relatively easy. Hopefully you'd agree with that. Let's move down to the next area. So we don't have any other non-current assets that we want to bring in, so we've already checked that. Short-term debt. Now the big secret here, please, let's take a quick pause. Short-term debt includes all interest-bearing items. In other words, bank loans, areas such as lease liabilities. Anything that really carries interest is either going to be short-term or long-term debt. All right, so let's get and go and have a look at our balance sheet, and we see we have this line of credit, and that's definitely an interest-bearing item. In other words, it's an item that we use to fund our business with, and no, that's about it. All right, so let's move to our next section, which is our accounts payable. There is accounts payable, bring that in. Our next section is other current liabilities, and I think let's just have a look to see. Oh, there's an item called other current liabilities, so we want to bring that in as well. And we have long-term debt. There's our three sort of key line items for long-term debt. Loan to shareholder, I'm going to bring that in. Lexus and the Yadkin loan as well. There you are, all nice and clean. All right, so next section is other non-current liabilities, which I don't believe I have any. And now we get into the capital component of our balance sheet. All right, so sometimes this can be tricky, and we'll talk a little more about how to get your balance sheet balanced on this in this principle. But essentially, bring in all your data. So capital stock, there it is, under share capital, okay, other equity, and in this case, I bring in all my other equity items as individual thing, except for where we're showing net profit and loss, I won't bring that in. Now, the reason being that your system automatically adds to equity the profitability, the net retained profit. So it automatically calculates that so that you can ensure that your data has been correctly loaded. All right, let's just get out of there and see what our problems are. So as we can see, we have some problems. The difference is shown right at the top there, nice in red, that you don't agree. What we notice is our first period does agree. So there are some things that we're going to need to worry about going forward to see that our balance sheet does balance. Now, The way that I do this is, well, simply go back to your balance sheet, have a quick look. Okay, we have reconciled our total assets. What we hadn't looked at this point is our total liabilities, just to ensure that our total liabilities have come in correctly. So my total liabilities for year one is 4565. Let's have a quick look at our total liabilities for year one. So scroll down. Total liabilities 4565731, and it's 4565731. Not a problem. All right, next year is 4097, and we've got 4097, and then we'll just quickly pop into the last year to have a look. 4670, and the last period says 4670. So we know our total assets agree and our total liabilities agree. So there is a little issue with regards to the way our that our capital has changed. Now, often one of the key reasons for this is a thing called distributions, and specifically in privately held companies, you know, the shareholder receives the total value of the distribution in their private name, and often the tax component of these distributions or any other shareholder distributions are sort of debited to equity, and this is normally where our problem is. Right now, as you can notice, the first thing that happens is our other equity here has changed from one period to the next considerably. All right. Now, normally, in order to determine the pure distribution, we have to fix this problem. So all I'm going to do in there is I'm going to bring the total at 1365885, bring that in there. In order to understand what's happening behind the scenes as such, as you've seen, I've changed my other equity to agree to what happened previous year. So we can actually see what the net movement is, and that net movement will ultimately be translated to what we call distributions inside our income statement. And the reason why we do this is we want to show the net contribution to our equity. And that value there is the net contribution to our equity. Let's see how that happened. I'll simply go back to our spreadsheet. Now, what we know is that our total equity from the previous period to the current period grew by $54,000. Yet, our net profit for that period was $1,720,000. Let's go and see how that was the case. There it is, $1,720,000. So now that we know, well, our equity should have grown by $1,720,000, it only grew by $54,000. Effectively, the owner has taken out of the business in a net distribution to the value of $1,665,000. So that now becomes the amount that we place inside our dividend, let's call it our dividend cell in the current period. And that will bring our closing equity to exactly what the balance sheet says. Let's go and have a look at the balance sheet. Our closing equity should be $3,254,000, and it is $3,254,000. Now, you notice I've done this just to make this relatively quickly. I did the same thing for each of the periods going forward. And once again, you notice that the differences are coming up here. Each time, these are real actual distributions that have been taken out by a shareholder, and we can actually put them in over here, and our balance sheet should be on a balanced basis. I'm not worried about a 1 or 2 difference. 30,036, and this is 335,828, and this is 4,677, and this is 217,336, and oops, pardon me, there I made a bit of an error. Let's plot again. Okay, double click on it, make that 0 just so that we know what the number is. 217,336, and then I only have to correct the last period of 2. Oops, there you are. Let's go to the last period. Sorry, 224917. Okay. Now, in theory, and in practice as such, our balance sheet should balance in based on the correct closing equity. Let's have a look. Our closing equity according to our data entry is 3724, and our closing equity in relation to the actual balance sheet is 3724. Right, so just in summary, now we have the ability to actually clearly understand what actual distributions have been taken out by the owner. And this shows, if whenever you have a discussion with your owner, this shows you very clearly how much they've actually contributed or reduced the equity portion inside their balance sheet. Very helpful for owners to understand this. Well, that's getting your data into your system, and it's Andre again, and bye for now.